Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. New York coffee. My apologies once again for the messy and complicated daily chart here. I assure you that it is necessary for me to interpret where we have been, where we are now, and what the opportunities may be ahead. Okay. So the pattern construction that led to the market moving higher started in between mid-March to early May with the dark blue highlighted bullish shift pitchfork, which is still operational if only just, with the market late last week and then again yesterday testing the lower time currently at 243.05, along with the nearby support of the rising mauve medium moving average currently 244.15 and a congestion zone between 241.05 to 243.40. containing the 2012 high at 241.05 and the November 2011 high at 243.40. I'll go into the very recent action shortly, but I'd like to highlight some other larger and longer term patterns first. In this, I must discuss the large bright red April to late October this year ascending wedge pattern, currently 249.75 to 268.95. This pattern had been biding its time since late spring until 7 weeks ago, when we saw a significant false break higher, which only resulted in a small double top over September, an Adam and Eve type, and leading down to where we are now. There is a more recent pattern as well, not so well defined but still there, and one that has possibly been triggered. It is a mid-August to late October head and shoulders top, with the previously mentioned double top being the split head in the head and shoulders top pattern. 2 weeks ago, the market breached the purple highlighted neckline for this pattern, currently at 249 even. And last week, it looked like prices finally pushed below the neckline. However, this week, the market's having trouble sustaining the move lower, and we are currently testing the purple neckline again, but this time from below. Nevertheless, I feel obliged to lay out some potential targets below, though I fully understand I may have to retire them as soon as next week. Thus, primary target X would be down in the 225.55 zone, with a secondary hard to reach target X1 down in the 192.15 zone. These same conditions apply to the previously mentioned large bright red ascending wedge pattern. These would have a primary target X2 down in the 232.90 zone, right on the 50% Fibonacci line of the May to September move, with a secondary harder to reach target X3 down in the 215.45 zone. Now, I must emphasize once again that I'm quite prepared right now to retire these targets immediately as the break lower from both patterns, though occurring right now, it is tenuous. This break lower is tenuous. I should point out that should prices break down through the 241.05 to 243.40 congestion below, then we have free air, possibly until target X2, where we have a large stratified congestion band between approximately the long moving average below, currently 223.25, up to the target X2 zone. Now, I will detail this congestion zone, the stratified congestion zone, further should we get down towards there. London coffee. 19 weeks ago, I initially drew a bullish Andrews pitchfork. 13 weeks later, I finessed this into a shallower bullish shift pitchfork for the same move to show the bullish angle of attack of this market. And that's the one you can see, which dates from late February to early May. It's highlighted in dark blue on my daily chart. And after a few false break attempts higher in late August, so over September, the market has moved down to where we are now, in between the middle time above, currently at 45.60, and the lower time below, currently at 4,000 even. The middle time has some additional reinforcement from the nearby slowly rising mauve medium moving average, currently 45.72, whilst the lower time has a front line just ahead of it, an advanced line of support ahead of it, formed from the gold long moving average, currently at 40.72. Another pattern has also emerged from recent action and is highlighted in bright red on my daily chart. It is the late April to early September, quite large ascending wedge pattern, currently 46.26 to 52.12. The lower trend line had been reinforced and also helped in reinforcing both the dark blue middle time and the mauve medium moving average, though it is important to note that prices breached this pattern on the downside 2 weeks ago and broke down through it last week. Last week also saw, finally, the market reach target X at 42.80, and that's the secondary hardest to reach target for the old early August to late September rising expanding wedge pattern that originated as a bull channel, which coincidentally was a target for the small late September to late October bearish halfway rotation as well. Okay, so with those now done, let's look at the break downwards from the bright red large ascending wedge pattern. This would have a primary target X1 down in the 39.45 zone, a secondary hardest to reach target X2 down in the 32.60 zone. Now I am mindful of the false breaks we have had from this pattern, so please be aware that though this right now looks like a good break lower, it may still turn back up. That being said, what we have in the way lower? Well, we have limited support below the April 2024 high at 43.38 until the gold long moving average and the dark blue lower time. And those two would be the main obstacles to the move down to target X1. Target X2 is obviously harder, but the best support seems to be the congestion band 32.60 to 33.63, containing the combined January 2024 high and May 2024 low, both at 32.61. I suppose it all comes down to whether the market has the strength to break the gold long moving average and the dark blue lower time. Right now it's finely balanced. The longer time goes on, the more it favours an attempt lower, just as long as it isn't too long a time. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.